Hello students, how are you? Hope all are keeping fine. Today we are going to start with chapter 1 once again, not for profit organizations. Hope you will be attentive and listen carefully and learn thoroughly. As per CBSE syllabus, this chapter carries 10 marks and the bifurcation of 10 mark is one question getting 6 marks comprising of income and expenditure account and a balance sheet, and one question getting 3 marks that may be based on either subscription based, fund based, expenses based, or consumable goods based, and one question carrying 1 mark that may be a theory question. So altogether 3 questions may come for the board examination consisting of 10 marks. Okay, now what a non-profit organization means. The meaning says that any organization formed for the sake of providing social services, or you say welfare services, to the common mass. This is known as a non-profit organization. There could be plenty of examples. Examples like charitable institutions, old age homes, orphanages, clubs, trust societies, hospitals run by trust and societies, schools run by trust and societies. All these are non-profit organizations because these organizations do not have any motive of making profit but to provide welfare services to the users, or you say the common mass at large. Let's learn about the features of non-profit organization. The first feature says motive. Motive means the intention or the purpose. It says the intention or the purpose of a non-profit organization is to provide welfare services, or you say social services. They do not have any profit motive. Second feature says entity. Entity means a legal identity of an institution, organization, etc. We have already learned about entity, the legal entity. It says that organization and the owners are separate. So both are known by their own name. Like any charitable trusts are known by its own name and members are known by their own name. That's why entity means legal identity of a person, maybe living or non-living. Third is form. It is a society or a trust, charitable trust, charitable societies, or any other type of societies providing services to the common mass. Number 4, accounts. These NPOs, they are supposed to maintain final accounts just like any other profit making concerns are supposed to make accounts. The financial accounts prepared are income expenditure account, receipts and payments account, and the balance sheet. These are 3 financial statements what NPO are supposed to prepare. Receipt and payment account. Receipt and payment account shows a summary of cash transaction taking place during the financial year. It shows only the cash transactions, nothing else. No credit transactions will be shown into receipts and payments account. Therefore, this receipts and payment account will always show a clear picture of cash position at a particular point of time. Features of receipts and payments account. Number 1, it is a real account. It starts with an opening balance of cash or bank. It records all type of transactions like revenue nature, capital nature, and any item belonging to past, current, or the next year. So every items, irrespective of what it is, provided it should always have cash present in it. So only cash items are recorded. This receipt and payment account will always have a cash balance at the end of the year shown as balance CD. Before preparing the format of a receipt and payment account, let's see what is a rule applicable for a receipt and payment account. In case of cash book, what we learned earlier, the rule says debit what comes in and credit what goes out. That means rule applicable for real account is applied here. So receipt and payment account is same as or similar as a cash book, what you learned in the previous class. Now what you're seeing is a receipt and payment account here. So on the left hand side you see the receipts, on the right hand side the payments. There are many items given on the receipt side. It begins with the balance BD followed by subscriptions, and there are revenue nature items as well as the capital nature items given on the receipt side. They're all cash what are received, debit what comes in. So whatever cash is received in any form, whether revenue form or capital nature form, they're all returned on the receipt side. Similarly, on the payment side, whatever cash is going out, like in the form of salary or in the form of purchase of any fixed assets, like salary is an expense, furniture is an asset. So on the payment side, the items that you are seeing is because cash is gone out of the organization. So the difference between receipts and payments account is shown as by balance CD on the right hand side, on the payment side. That is a net difference of cash at the end of a particular financial year. So kindly go through all these items given on the receipt side as well as on the payment side. Let's come to the second statement, as income and expenditure account. It says that it is an account prepared with revenue, expenses and incomes of the current year. It follows accrual base of accounting. Now what is accrual base of accounting? The word accrual base stands for any item, whether it is of cash nature or non-cash nature, both will be returned into this statement. So it is prepared in the same order as a profit and loss account is prepared. If you remember in 11th class, as a previous class, you already learned about how a profit and loss account is prepared. It's a nominal account. It is debited with expenses and credited with the incomes. In the same order, income and expenditure account is also prepared. On the left hand side, the expenditure column, all the expenses belonging to the current year, that is a revenue nature item only belonging to the current year, whether cash is paid or not, they will be written there. On the credit side, whatever income is received either in the cash form or non-cash form for the current year, they will be mentioned or written on the income side of income and expenditure account. Let's come to the features of income and expenditure account. All expenses of the current year is recorded on the expenditure side, and all incomes are put on the right hand side, that is income side of income and expenditure account. It records both cash as well as non-cash items of the current year. It follows accrual system of accounting. I told you what accrual basis of accounting means. Rule. I hope you remember the golden rule, what you learned earlier. It follows the rule of nominal account. The rule says, the golden rule says, debit all expenses and losses, credit all incomes and gains. So the same rule what you learned in the previous class, the same is applicable here also. On the debit side or left side, the nominal expenses and losses are written. On the right hand side, income side, all incomes and gains are written. Now let's come to the format of income and expenditure account. Look at the format. On the left hand side, you see the expenditures. There are many expenditure or many expenses are written on the debit side or left hand side, starting with salary, and to the salary some adjustment is already done, which means if any salary payable for the current year not paid till the end of the year, that will be known as outstanding salary. Therefore, outstanding salary of the current year is added to the salary. In the same way, same thing will be applicable for any other expense also. If any other expenses are still due during the current year, that will be added back to the concerned expenses of the current year alone. So you can look at the expenses given there. Now coming down, look at printing and stationery. Here prepaid expenses are subtracted. What prepaid expense means? If suppose any organization pays in advance any expenses for the next year, that means that expense will be subtracted from the total expenses of that particular expense in the income and expenditure account. So on the expenditure side, whatever you see, they are all nominal items, expenses. On the right hand side, you see subscription, and some adjustments are given there. Like any subscription outstanding at the end of the year, which means amount of subscription supposed to be received during the year but not received, they are added. And any advance subscription received in the beginning of the year, that means last year, for current year, is added to the subscription. And two items are subtracted. Any outstanding subscription in the beginning, that means belonging to previous year, of which the adjustment had already been done previously but received now, therefore it is subtracted. And any subscriptions at the end of the year paid in advance for the next year, that is also subtracted. So you find some adjustment to subscriptions done over there. Similarly, there are many other incomes also mentioned over there. So whatever items are given on the expenditure side and income side, they are all nominal items. The golden rule applicable here is debit all expenses and losses and credit all gains and incomes. The net difference of income and expenditure is either surplus or deficit. If income side exceeds the expenditure, the difference is known as surplus and is written on the expenditure side. On the contrary, if expenditure exceeds the income, the difference is written as deficit on the income side. Let's come to the last statement, that is the balance sheet. Balance sheet is a position statement. It is prepared in the same manner as it was prepared earlier for a trading concern, profit making concern. So there won't be any difference between the order of preparing the balance sheet, either in the form of permanency method or in the form of a liquidity method. It consists of liabilities and assets which will be shown into the balance sheet. The difference, the excess of assets over liabilities, is termed as capital fund or general fund. Either of the term can be used. I say the excess of assets over liabilities is termed as capital fund or general fund. Now while preparing balance sheet, we learned that under all circumstances, total assets of a business will always equal to capital plus liability. So the accounting equation proves good here also. The formula for preparing the balance sheet is as follows. Total asset is equal to capital plus liabilities. Let's come to the last statement here, that is the balance sheet. This is also known as position statement. On the left hand side you see the liabilities. The very first item is capital fund. To the capital fund, surplus is added. If suppose there are any deficit will be subtracted. So either surplus or deficit, one item will be there. Surplus will be added, deficit will be subtracted. You find some other liabilities also, like life membership fee, that is also added to capital fund. Then there are specific fund. Specific fund means any fund which is received for a particular purpose. Therefore, it is a liability and will appear in the balance sheet. Any expenses of specific fund will be subtracted from that only, or any donation received for specific fund will be added back to the concerned specific fund. Any interest received will also be added to it. Then legacy, endowment fund, tournament fund, all those things will be shown on the liability side. On the asset side, you find furniture, any purchase made during the year added. If any depreciation charged, it will be subtracted. So the balance sheet, preparation of balance sheet is the same as what is already done previously. So we are following the permanency method of preparing the balance sheet here. So look at it carefully, learn thoroughly. So all the three formats and the details so far given to you should be memorized, should be learned thoroughly. Repeat the video again and again so that you will be able to remember things clearly.